Hi, welcome to the Accountability Initiative series on breaking down the budget. One of the factors which make budgets so complicated is that the formats in which documents are presented keep changing year on year. In this video, we will walk you through some of the format changes expected in the budget documents for the financial year 2017-18. There are three major presentation changes which we expect. First, with the doing away of the plan-non-plan distinction, budget documents will instead focus on revenue and capital. Second, budget documents often group line items into categories. These categories will also be changing this year. Third, there are changes in which the format of particular schemes will be presented. The first major change is the move towards a revenue capital distinction instead of a plan-non-plan distinction. If you take a look at the document on the left, you will see how the older formats looked. Notice that there are separate columns for plan and non-plan expenditure. Individual line items have no revenue or capital distinction, although these figures are presented for the total department. If you take a look at the document on the right, you will see how the newer format will look. You will notice that there is no separate plan or non-plan allocation. On the other hand, there are separate columns for revenue and capital. This makes it easier to find out how much revenue or capital allocations have been made for individual schemes or institutions. The second major change is the classification of budget line items into 6 major categories. The statement of budget estimates for every ministry and department will follow the same format. These 6 categories are establishment, which includes expenditure on salaries and office expenses; central sector schemes, which are programs run completely by central ministries; other central expenditure, which includes funding for PSUs, autonomous bodies, and so on; centrally sponsored schemes, which are schemes which are designed and partly funded by the center but implemented by state governments; finance commission transfers, which are transfers to states recommended by the finance commission. This will only show up in the estimates of the finance ministry. And finally, the last category is other state expenditures. These include other transfers such as those for disaster relief. Again, this category will also be blank for most departments. For example, let's take the budget of the Ministry of Human Resource Development and see how these changes might look. Establishment will have the allocation for running the secretariat, which is the ministry itself. The second category on central sector schemes will include scholarships, training, and so on. Funding for bodies like the Bal Bhavan, NCRT, and Kendriya Vidyalayas will be classified under the third category of other central expenditures. The fourth category, centrally sponsored schemes, will include the Sarva Shiksha Abhiyan, midday meals, and so on. And the last two categories will have no items in them. The last change in budget formats this year is in the presentation of centrally sponsored schemes. All centrally sponsored schemes will be listed in a 3-tier format, with the first tier being occupied by umbrella schemes, the schemes themselves occupying the second tier, and the third tier being reserved for components of the specific schemes. Let's explain this step by step. Umbrella schemes, which are in the first tier, are collections of related schemes in a particular sector. For example, the National Education Mission consists of the Sarva Shiksha Abhiyan, the Rashtriya Madhyamik Shiksha Abhiyan, and Sakshar Bharat. There are 28 such umbrella schemes being run by the Government of India. The second tier is the actual scheme itself, such as Sarva Shiksha Abhiyan, and the third tier will be components of the particular scheme. We hope this video clarifies the format changes anticipated in this year's budget. In the next video, we will talk about how you can compare numbers for budgets across different years. Thank you for watching.